Hello and welcome to part 3 of learning Forex together. In the previous video we talked about ask, bid and spread prices in Forex trading. In this video we want to understand what is pip in Forex. Pip is actually the smallest price move for a given exchange rate. In most currency pairs, a pip is equal to 0.0001. And if we multiply the side of this equation by 10 repeatedly, we have 10, 100, 1000 and 10,000 pips. For example, 0.001 is 10 pips and 0.01 is 100 pips. Back to our previous example, we have an ask price of 1.6 and a bid price of 1.5. So the spread or difference between these prices is $0.1 per euro, which equals to 1000 pips. Let's consider another example. We open a trade and go long on euro dollar with these ask and bid prices. And we buy 1000 euros. We use the ask price of $1.005 per euro, so the total cost is $1005. Later, the exchange rate increases. We decide to close the trade by going short, using the bid price of 1.009, which gives us $1009. This results in a profit of $4. Now, using pips, we can calculate loss and profit in another way. First, we want to measure our profit or loss based on 1 pip change in the exchange rate. In our example, we are buying 1000 euros. So for 1 pip change, we have $0.0001 per euro times 1000 euros, which equals to $0.1. This means that for a 1 pip change in the exchange rate, we have a $0.1 change in profit or loss. To calculate the profit in terms of pips, we note that we entered the position at 1.005 and left at 1.009, a difference of 0.004 or 40 pips. To convert this profit into dollars, we multiplied the number of pips by the value of 1 pip and we get $4 profit. Let's consider another example. We decide to go short on euro pound at an exchange rate of 0.8475 to 0.8476 and sell 10,000 euros, receiving 8,475 pounds. Later, the exchange rate increases. To minimize our loss, we decide to close the trade and go long. We buy back the 10,000 euros at the given ask price and pay 8,486 pounds. This results in a loss of 11 pounds. Initially, we thought that euro will lose value compared to pound, but it strengthens, meaning that we have to pay more pounds to buy back 10,000 euros. To calculate the loss using pips, first we measure the pip value. 0.0001 pound per euro times 10,000 euros equals to 1 pound. In other words, a pip change in the exchange rate of pound euro will lead to 1 pound loss or profit. We subtract the exchange rate of entering and leaving the position, and we find that we have a change of 0.0011, which equals to 11 pips. Therefore, we experienced a loss of 11 pounds due to an 1 pip movement in the exchange rate. If we assume that the pound dollar exchange rate is 1.3, we have 11 pounds times $1.3 per pound equals to $14.3 loss. Thank you for watching.